Morning to all. As usually on Mondays, we are discussing the results of the previous week and are trying to understand whether its consequences will be absorbed this week and also what are the major expectations from this week's as well as the major events. Last week was rather busy because it has started with some unpleasant things related to the situation in the energy market. Then it follows with the second default on payment from the Evergrande. Also, we have issues with US government debt ceiling, infrastructure plan, I mean, a lot of things, and most of them they were actually with the negative background for the US stock market. I would say there was no any single positive news for the risky assets and US stock market in particular. And as a result, as we have discussed with you, September really happened to be the worst month for the US stock market in 2021 because Nasdaq has lost more than 5.3%, which is the worst since March 2020. The same has been done S&P 500 index. I mean, the worst month since March 2020, and the Dow Jones dropped by 4.3%, which was the worst result from overall in general in 2021. Um, so as you can see, these stats which showed us that the September was the worst month over the past 10 years, past 20 years, past 70 years. Actually, it's true. But let me point your attention that according to these stats, October and November, they tend to be very positive months. So overall, in general, you've got to be careful, but don't forget that these are just the average values. It means, for example, that over past 10 years in October, the average increase is 1.65%. This is on average, which means, for example, that in 2010 the growth was 10%, but in 2012 it was minus 8%. And as a result, in general, we have something like 2% of growth. So you have to understand these things and don't overestimate the positiveness of this figure because the fundamental background particular which is here and right now it is not favorable for quite serious price increase in the US stock market. Why? Let's start with the energy crisis. Let me remind you, it has been started in Europe because the gas inventories in Europe, they are not fulfilled. They are lower than the 5-year average. Usually there should be something like 92, 95%. Now we have something like 72, which is rather scary because there might be issues with during the heating season. Then the situation significantly get worse thanks to the UK because of the fire, and the power cable was damaged, and 2 megawatts of energy which flowed from France to UK, it has stopped, and it has caused pre-panic moods in the UK. And the situation gets even worse for the case of UK because there were no winds in the Northern Sea, and as a result, the electricity generation from the wind power stations it has dropped significantly. And the finish of this, the current one, of course, this is not the end of the story. And the current finish is the gasoline crisis in UK. Last week, Boris Johnson has to use the army to somehow fix this situation. Let me remind you that the cause is not the absence of gasoline as it is. The problem is that there are no truck drivers who might supply, who might transport the gasoline from the inventories, from stocks to actually the gas stations. And as a result, great lines in the gas station of UK, and extremely bad mood in the UK related to this situation. But we might say that these are the single cases of the Europe, which hasn't managed to buy enough gas for some reasons. This is because of the single UK with their Brexit and their inability to relaunch the economy in the new reality. But last week we have another serious confirmation. China has issues, and these are quite serious issues, quite scary issues related to the electricity. They have decided to shift from the coal electricity generation to natural gas and hydropower generation, but because of dry weather in summer, there are difficulties with the hydropower generation. Because of high prices for natural gas, there are issues with the natural gas as well, and as a result, there is a shortage. There is a shortage of electricity in China, which caused the halt of the productions in different provinces. The producers of supply parts to Apple, Tesla, and many other companies, they have been stopped. And this might be a very serious thing, because we are talking about the second biggest world economy, which was the loco of the global economy over the latest 10-15 years, and this is quite serious. As a result, Nomura and Morgan Stanley and other analysts, they have downgraded their forecast related to the Chinese GDP in 2021 and in the nearest future, which is of course the problem. I mean, this is a global situation just right here and right now, and there is no just right here and right now, there is no easy solution of this situation, because it has all the reasons to get worse. I mean, the panic is still here, it is with us, it is very big. I mean, the panic in the energy market, and the heating season, it has come actually, and this might increase the gap between the demand and supply, and this will in turn cause the further growth in prices and the further panic pressure in the world. With all the consequences like we saw in China. I mean, the production facilities are closing, they are halting, and this is a very serious problem. And this is not the only problem. Evergrande, the second biggest developer in China, last week has defaulted on its second payment. Pre-last week, on 23rd of September, that they have to pay 43.5 million in coupon interest, but they have failed. And last week, on the 29th of September, they have failed to pay another payment, even despite the fact that they have managed to sell their stake in Shenzhen Bank by $1.5 billion, and investors decided that this is the solution. But as you can see, at least according to the facts, it doesn't help to solve the situation. So the clock is ticking out. We have 30 days grace period for these payments. If after 30 days there would be no payment, and this actually is going to be happened in 3 weeks, less than 3 weeks for the case of the first payment, there would be official default. Official default, it will cause very serious and devastating consequences. Markets do understand it, markets do afraid this. Yeah, the only positive news, I would say, the only one, but this is not, this is rather the absence of extremely negative news. I mean, the case of shutdown in the US. On Friday, there might be a shutdown of federal government facilities because of the lack of finance, but at the last minute, the Congress managed to prevent the shutdown, and they have adopted a bill that funds government through the 3rd of September. This is not the total solution of the situation, because the problem is still here. The problem is with us, and this problem is called US debt ceiling. Yellen last week has told during her testimony in Congress that the time is only till the 18th of October. So something like 2 weeks are left. If there would be no extension of debt ceiling moratorium or or increase of deficit. In this case, US might claim default as well. So the situation is extremely tough. And there are also issues with infrastructure plan, because Democrats last week they have failed to vote on 1 trillion bipartisan infrastructure bill, and this is also the reason for markets to be concerned. Looks like that there should be a deal, but still the problem is still it is with us. Powell last week provided testimonies in Congress, one in Senate on Tuesday, the second on Thursday was in Senate. What is the major thing we have known from this? That looks like the Powell is moving into the acceptance stage. I mean, he finally understands that inflation is high. Inflation is not temporary. It is high. It is with us, and it's going to persist. So the markets understand this as a signal that in the nearest months, maybe this month, but almost for sure in November, on the 4th of November, there should be a start of the tapering. So the tightening of the US monetary policy. The tightening of the US monetary policy is a very good signal for the US dollar. And last week we have discussed this so-called smile theory and dollar behavior. There is a double bottom reversal chart pattern has been created on the daily chart. According to this pattern, we can expect for the further growth of US dollar, for rather significant growth. And the smile theory, according to this theory, this shift in US monetary policy, this is a very, very serious bullish signal, and we are at the stage when the smile is forming in the upward direction for the dollar. The last news we haven't discussed last week because it was published on Friday, the inflation in Eurozone. It has reached a 13-year high, and the situation is going to be getting worse and worse because the prices for the energy assets. Let me remind you, the growth of prices in natural gas, here it is, it has caused the growth in prices for the coal, for the oil, for the uranium, and as a result, we will face for sure the growth in PPI and the growth in CPI as well. So the central banks they are very limited in their behavior. They have to tighten the monetary policy, and this is the only solution. As for the market sentiments, Friday, it was the day of relief, I would say, and it can be seen both from the dynamics of the US stock market, S&P in plus, Dow Jones in plus, Nasdaq in plus, and from the dynamics of the fear index, it has decreased, and fear index has left the extreme fear zone, but still it is in the fear zone, very close to the extreme fear zone, and this is certainly not a reason to say that the worst has been over. No, it's just come. Key events of this week: OPEC Plus meeting today is going to be happened, and there are a lot of expectations from the market participants that we might face not only further increase in oil production from the OPEC Plus. Let me remind you, we are talking about 400,000 barrels per day, but maybe there would be more significant increase because of this tough situation in the energy market, because of this crisis, and this might face the sell-off. It might cause the sell-off in the oil market. So we have to follow this for sure. Tomorrow we will discuss the results of this OPEC Plus meeting. Also, this week is extremely important for us because of the US labor market. On Friday, they would be published NFP data as well as the other stats related to the US labor market, like the average hourly earnings, the unemployment rate. So serious, important data. Similar data will be published from Canada, and also retail sales in Eurozone. So as you can see, not so many events, but all these previous things, all these previous tales, like the Evergrande, like the US government ceiling, like the energy crisis, they will persist. So the week almost for sure is going to be tough. So let's get ready for this. Anyway, have a great week. Thank you for your attention. Have a good day and see you tomorrow. Bye.